Despite pretty elevated expectations coming into the print, a bigger tariff headwind, CAT really delivered very solid 3Q results. It was really driven by higher volumes across all three of their core businesses, with particular strength in energy and transportation again. But I think, one of the more encouraging signs that we took away from the results this morning were that orders accelerated here in the quarter. And we also saw backlog improve sequentially to a record $40 billion. So we think we see, above average production and earnings visibility as we begin to think about next year.
Did the company say a lot about the power producing equipment, including turbines and generators, that have investors excited about it being kind of a derivative play to the AI story?
Absolutely. So, we continue to hear more and more about AI and data centers and CAT's exposure there. Today, power gen's probably, roughly 30% of the energy and transportation business, roughly, 15% of the overall enterprise. But it continues to be the fastest growing part of the portfolio. They're bringing on a lot of capacity here over these next 3 years. I think you'll really begin to see a step change as we move into 2027, particularly on the large engine side. So there is more of a focus and investment on the energy and transportation business, and it has become, the biggest part of their portfolio.
Wow. Are there other companies, or let me put it this way, who does CAT compete with in that segment of the business?
Yeah, so there's a number of different competitors, and it really breaks down on relative by size on some of the gen sets. Cummins is a big one, Siemens Energy, and then you also have a few other European and Asian players. But this is certainly a market that's growing pretty exponentially here. Backlogs extend several years, so we think we have pretty good visibility at least through the next 3 years.
Does this part of the business mean that Caterpillar will need to rely more on domestic market opportunities as opposed to global market opportunities?
So their footprint is the largest. The energy and transportation footprint is the largest in North America. But, I think the opportunity is global. They are a large global producer that they serve, essentially almost all markets around the world. I think even particularly within energy and transportation, it's like something like 100 different countries. So while I think the immediate near-term excitement is more focused here in North America, I do think longer term there's an opportunity international as well.
What's the company saying about the impact, if any, on tariffs on their business now and going forward?
Yeah, so tariffs were actually a much bigger headwind than we anticipated in the quarter, and even CAT. I think it kind of shook out somewhere around a $600 million headwind in 3Q, but margins were better than expected, really pretty remarkably resilient despite these price cost headwinds. 4Q will actually see a step up in the tariff costs. And then as we think about next year, CAT's really been kind of hesitant to pull the pricing lever on a lot of tariffs thus far. We think that's more of an opportunity for them here in the near term to gain some market share. So as we think about 2026, it'll be interesting to see, do they continue to offset through more cost and productivity efficiencies, or do they lean into pricing a little bit more? But tariffs will step up here in the near term. And then, 2026, it still remains to be seen, but I'd expect the demand backdrop to improve. So they certainly should have the opportunity to push pricing a little bit more aggressively next year.